Broadly, yes. I think if you look at if you believe that the Japanese yen is going to continue to weaken, then there's always sectors where you can profit. You can profit from that, or you can either avoid losing money on this theme. So, in terms of our regional exposure, obviously the biggest competitor to Japan, or perceived competitor to Japan, would be Korea, right? By virtue of the similarities in terms of their exports, the business model. And the biggest competition between Japan and Korea is really in the auto space. So that's one sector we would avoid in the region. Okay. On the other hand, we are able to profit from a continued weakening of the Japanese yen. For example, on the currencies front. As you know, the Japanese housewives are one of the major participants in FX trading. If the thinking is that the Japanese yen is going to continue to weaken, then typically they would move their funds or move their monies into higher yielding countries, higher yielding assets. And their traditional destination has been Australia, of course. But I can see in terms of not just the Japanese housewives, but Japanese retail investors or pension fund investors looking to deploy more monies into this region. I think a couple of weeks ago, we heard that the Japanese Postal Bank is looking to deploy a few trillion ringgit into emerging market equities because they think that the yen is going to continue to weaken, number one. And number two, with Abe and the Central Bank of Japan targeting 2% inflation target, that would have negative repercussions on JGBs, or Japanese bond prices. And therefore, this shift in monies is something, a larger theme that we can capitalize on.